Subscribe now and press the bell icon.
All right, so let's start with the session here in which we will discuss about the market, right? And the basics of the market. We will first of all discuss like what are the basic things that is required in the market, and then we will move to the advanced concept, that is technical analysis. Now, if the very first thing we notice that the market, basically stock market, is divided into 5 subcategories. I hope the screen is visible to you and you are able to see that on the screen. Okay. See, these are the 5 categories of markets that is available. The first one is the capital market, debt market, derivative market, currency market, and commodities market. So these are the 5 categories in which the stock market is divided. Now, whenever we say the equity market, you must have heard the name equity, right? The equity market or the capital market, both are the same thing, because the capital market is also called as the equity market, in which all the companies like Reliance, Infosys, HDFC Bank, State Bank of India, Wipro, Tata Motors, these all companies are listed. So these all companies are also called as equities. These all companies are also known as the equities. So that comes under the equity market. The timing of the equity market is 9:15 a.m. to 3:30 p.m. So from 9:15 to 3:30 the capital market is operational, and it is used for doing investing as well as trading. So investing, that is long-term investing, in which you invest your money for 4-5 months, 1 year, 2 year, or bigger time frame, bigger span, that can also be done. And trading can also be done, in which you invest your money for shorter durations in the stock market, right? So for both the purposes, capital market can be used. Now, the second type of market comes as the debt market. Now, what do we mean by debt? Debt means liability, right? Debt means, a liability. So debt market basically is a market in which, if any company want to raise emergency funds or funds on immediate basis, so they use the debt market. Now, see, the debt can also be taken from banks, right? Because a company can take a loan from bank. Then why they are not going for the bank? They are going to again to the public for the debt market, because whenever they are raising funds from debt market, it is raised on low interest rate as compared to banks. Because if a company will take funds from banks, the bank will charge an interest rate of 14 to 15% or minimum to minimum 12%. But on the same contrary note, if the company is offering 8% or 7% rate of return to the public, right? So they are saving their money. They don't need to pay high interest to banks. So they go for the debt market. So in debt funds, basically, bonds and debentures comes. Now in India, the bond market is very immature. It is very small, because in India, people are not working very much in the debt market. They are not aware of this market. But in US and in China, the debt market are very big. They are almost equal to the stock market. But in India, in debt market, only mutual funds are more active. Only mutual funds are active in debt market in India. In India, the retailers and public, they are not active in the debt market. Okay. The next set of market is the derivative market. Derivatives. Now, derivatives basically are the trading tools. Derivatives basically, are used specifically for trading. You cannot use derivative for investing. Derivative are meant for short-term trading and only for making strategies. Now, as you have heard you must have heard the concept intraday trading or swing trading. That is trading for short term. That means if my view is that this stock will rise 3 to 4% in coming 2-3 days. So I will make a strategy in that. So for only that purposes, derivatives are used for trading. The next market is the currency market. Now currency market and commodities market, these are the important markets. Why? Because the currency market, as the name is telling, in which currency market is a market in which we are trading in the currencies like dollar, pound, euro, rupee, Japanese yen, Swiss franc, and many more currencies. So currency market is also called as the forex market. It is the forex market. The timing of currency market in India is 9 a.m. to 5 p.m. 9 to 5. The currency market is operational 9 to 5. Okay. But important thing here is that currency market is only meant for trading, not for investing. In the currencies, you cannot invest for very long durations. You can trade in that. Okay. The last market is the commodity market. The last but the most important, commodities. See, whenever there is any type of inflation in any part of the country, or if there is inflation in the world, that is majorly due to commodities. Like in the current set of time, if you notice that from the time Ukraine and Russia are into war, there is a global disturbance in the demand supply chain, due to which crude oil and natural gas, they are getting expensive, and that is directly impacting the petrol rates, diesel rates, and the CNG and LPG rates. CNG rates have been gone very high, from almost 35-40 rupees per kg to almost 80 rupees per kg in different cities. So why it is happening? Because whenever there is global uncertainty due to war, due to pandemic, or due to anything, the major impact comes on commodities, and commodity is a direct tool to measure inflation. Because if commodity prices are rising, gold and silver also come under commodity. So if the commodity prices are rising, inflation will go up. So commodities and stock market performance, that means the equity and commodity, they basically run inverse to each other, opposite to each other. If the equity is going up, if the stock market is strong, at that time inflation is low and commodity prices are also under control. But if commodity prices are going out of control and they are rising very much, so that point of time inflation is high, GDP is weak, currency is weak, right? And the stock market will automatically come down. Like in the current point of scenario, if you have noticed, if you track the markets are continuously falling from last 2 months. Not only our market, but the US market as well as the European markets, all of them are falling. Due to the reason why? Because the commodity prices are continuously going up. Now, commodity are divided into 4 categories. Commodity market is a vast market in itself. It is divided into 4 categories. First category is bullions. Now in bullions, it comes gold and silver. Gold and silver are the bullions. Next is metals. All the metals like aluminium, copper, nickel, tin, zinc, lead, all metals come under this category. Third category is oil and gas. Now in this category, what comes? Crude oil and natural gas. That comes into this category. And the last category is agri products, agri commodities. In this, all the agri commodities like cotton, jute, oil seeds, turmeric, spices, all of them come under agri commodities. Now see, commodity market is not any country specific market, okay? Because see, commodity prices are not different in India and it is not different in US. Commodity prices are international prices. If gold is getting expensive, it is not only getting expensive for us, but it is getting expensive for the complete, global world, for everyone. So commodity market is a global market. So in India, commodity market timing is also very long, very lengthy. The commodity market starts at 9 a.m. in the morning up to 11:30 p.m. in the night. That means they are operational more than 14 and a half hours in a day. Commodities, right? So these are the 5 set of markets in which the stock market is divided. Okay, clear? currency, commodity, derivatives, debt, and the first one is the most important, equity capital market, right? Now, next concept comes here is that, why do we invest in market, or why do we trade in the market? The very simple reason is profit. If you want to learn something today, if you are active, so you want to get profit from the market, right? Everyone is here for profit. So one investor or a trader is coming in the markets for profits. And why the companies are coming, what the companies need? There are many companies in stock market, right? There are such companies, those are listed in the stock market from last 40 years, like Wipro, Reliance, Maruti, Tata Motors, State Bank of India, ICICI Bank. These companies are very old companies. And there are many companies, those have recently come in the market. The very fresh listing is LIC, Paytm, Zomato, Burger King. So why are the companies coming in the market? What do they, motivate? What do they aim, and what is their target? Any idea you have?
To improve their like for Paytm, if they are coming in the sense like they want to more customers now, sir. Like they want to explore this. For example, for Google Pay, for like that app also, they need more customers to grab this. They need to.
Customers, they will not get from the stock market. What they will get is, they will get funds from stock market. Funds, money. So any company that is coming into the stock market, main reason is funds raising. To raise funds from whom? From public. Any company want to raise funds from public. Now what do the company will do with this funds? They will expand their business. They will expand their business, right? For example, if you are having a business, right? Now if I say you that, can you grow your business more big? You will say, yes, I can grow my business. What I need is, I need 50 lakh rupees fund. So every company needs fund to grow. But here, from whom they are getting the funds? They are basically offering their shares to public, and public is giving them the money. Simple concept, right? So they are basically, making public as their stakeholders in the company. But why only public, or why fundraising from public? If a company want to raise funds, that can be easily done from a bank. That can be easily done from, investor. Like, an investor can invest money in the company, in the startups. Many investors invest. So why only public, not a bank? Because see, if I have two options, I want to raise 2 crore rupees for my company. I am eligible for a loan. Here the condition is not that I will not get a loan. I am eligible for a loan. So why I am not taking a loan? Why I am going to public? Any reason? Do you think why bank is not, they are not opting for the bank?
Like maybe the interest rate there.
Okay, interest rate can be one thing, but the major thing, what is the major reason why banks is not opted by the company? See, let me tell you. Now the fundraising can be done from a company, from public, and from bank, from both the sources. But when a person is raising funds from a bank, there is no risk sharing, right? What the bank will need, whether your company is in profit or it is in loss, bank will need its money completely back with interest, right? So bank is not sharing your risk, but public is sharing the risk. The public will invest in your company, and they will get return only when your company is in profit. If your company is in loss, the share prices will come down, and public will also be in loss, right? So fundraising from public, the first important thing is that there is risk sharing with public. Public is investing money, but they're also sharing the risk, what the bank is not doing, right? Bank needs the complete money back with interest, whether you are in profit or you are in loss. So risk sharing is the most important thing that public can give a company. That's why fundraising from public has been opted by the company. The most important reason. Now, this complete process of raising funds from public is called as IPO. I hope you have heard this name, IPO, initial public offering. This is a process by which any company which is coming into the stock market for the first time, they offer the shares to public through IPO, initial public offering. Like right now from 4th of May till 18th of May, IPO of 4th of May to 9th of May, IPO of LIC was open, right? LIC's IPO was open in which they offered the share to the public. But can any company come in the IPO? Well, yes, any company can apply for the IPO, but there are certain conditions, terms and conditions that are being made, and those are made by SEBI. Who is SEBI? SEBI is Securities Exchange Board of India. SEBI is the regulatory body that is regulating and managing the complete stock market operations. All the stock market operations and everything is managed by SEBI in our securities market, right? So SEBI basically, monitors the IPO, and there are certain conditions made for the companies coming to apply IPO. Now, what are the major conditions for an IPO for any company to follow? See, the first major condition is that any company that want to come for an IPO, the company should be minimum 3 years old. That means any company that is applying for the IPO is doing business from last 3 years. The business model is at least 3 years old. Second important condition is that the company that is applying for the IPO, company should not be a defaulter, or the company should not be blacklisted. That means the company basically has not done any type of default, any type of loan default or anything in the past 3-4 years, or in the complete track record, or the company has not been blacklisted. So this is the second condition that the company needs to follow. The third and the most important is the turnover. Minimum turnover of the company should be 50 crore rupees. That means any company that is want to apply for the IPO is doing business worth 50 crore rupees. Now see, this is the turnover, right? We are not talking about profit. This is the turnover complete. There are many companies, those are not in profit and they are still part of the stock market. They were given permission to bring the IPO, like Paytm. Paytm is not in profit, it is still in loss. Zomato, Nykaa, there were many more. So these business models are still in loss. They are still burning their cash to run the company. So these are the three important conditions: that turnover should be minimum 50 crores, company is not a defaulter, and the company is at least 3 years old. So if the company is completing these three conditions, that company can apply for the IPO. Now it can apply for the IPO, right? Permission is still given by SEBI, because SEBI verifies all the things. There is a complete verification done by SEBI related to company's background history, company's promoters, directors of the company, what are they doing, are there any type of police case or any type of criminal case on them, or what is the nature of the company, how the company is working, is the company really working or is a paper company? Because see, many companies are also paper companies that they are only on papers, they're not doing any type of business. So complete verification is done from SEBI, and after complete verification, when the SEBI finds everything fine, then the company gets the approval from IPO. Why SEBI is doing such so much investigation and everything? Because see, the company is going to raise funds and they will get the funds from public, right? So here public is giving funds to the company, not government is also not giving, not any company is giving. So what does the basically company needs? Company basically what does a SEBI needs? SEBI needs that whatever funds are given to the company, they should be secure, because that is the public fund, right? That's why so much verification and everything is done. But still, the IPO successful ratio depends upon the subscription. IPO will be successful or it will fail. That will depend upon the public participation in the IPO. Now, what do I mean by public participation? That how many percentage of people are applying the IPO subscription. A IPO needs minimum 90% subscription. A IPO needs minimum 90% subscription, then only the IPO gets successful. Now see how many people are there that apply for the IPO. There are set of people that apply for the IPO, like there are retailers. Retailer means general public, like you, me, everyone, we come under the retailer segment. Banks, QIBs, qualified institutional buyer, mutual funds, and HNI investors, that is the big investors. So these are the set of people who apply for the IPO, right? But everyone has a complete quota already fixed. They all have their share fixed, that how much money they can put in the company. Like retailer quota is always higher. Retailer quota may be 50%, banks quota will be 20%, QIB quota will be 5%, mutual fund quota will be 20%, and HNI quota will be 10%. So that will completely make the 100%. Now including all the investments, like including everyone's stake, a company needs minimum 90% subscription. That means, for example, if a company is bringing 1 crore shares in an IPO, the total number of shares are 1 crore, right? So 90% of 1 crore becomes 90 lakhs. So company will need, the IPO is open for 3 days. Generally an IPO opens for 3 days. In these 3 days, 90 lakh shares, which is 90% of the total number of shares, should be sold out. Then only that IPO is successful. So a successful ratio of IPO basically depends upon the subscription of the complete IPO. Then only the IPO gets listing in the exchange.
Sir, if it is 1 lakh crore means, like in how many subscriptions they will give, sir? For example, you are saying 1 lakh.
Whatever number of shares they are bringing, whatever the number of shares is, there can be 1 lakh shares, 1 crore shares, 50 lakh shares, whatever the amount is.
So that the number of shares can be determined by that company only, sir. Number of shares.
Yes, the number of shares is determined by the size of the company. What is the valuation of the company? Okay. Like LIC valuation was 6 lakh crore rupees. So the total number of shares LIC was offering was 16 crore shares. 16 crore shares. So LIC needed 90% of 16 crore, that is 14 crores and 60 lakh shares minimum sold to public. That means minimum 14 crore 60 lakh shares should be sold out. So number of shares basically will depend upon the valuation of the company. What is the company value, including all the company's assets, liabilities, everything. What is the net worth of the company? So that will determine that how many shares the company will come with. Let's suppose there is a small company that is coming with only 5 lakh shares. How many shares? 5 lakh shares.
5 lakh.
Yes. So the total number of shares company is offering in an IPO is 5 lakh. So the IPO will get successful only when 90% of 5 lakh, that is 4.5 lakh shares, are subscribed by the complete set of this group. Okay. So whatever number of shares the company is bringing, whatever 90% subscription is required, then only the company's IPO is successful. Okay, that is the condition. Now this is the IPO. So once an IPO gets successfully listed, it becomes part of the stock exchange. It comes under the exchange. Now when we talk about exchange, we are having 2 exchanges. There are 2 exchanges that we have. The name is NSE and BSE. Are you aware of these 2 exchanges, NSE, BSE? Okay, you don't know. See, I will tell you. NSE basically stands for National Stock Exchange. NSE is National Stock Exchange and BSE is Bombay Stock Exchange. Okay, NSE is National Stock Exchange and BSE is Bombay Stock Exchange. Now, NSE basically was formed in 1992. It was formed in 1992 and the index name for NSE is Nifty. Nifty 50 is the index name for NSE. Okay. But NSE has total number of more than 1800 plus companies in the exchange. NSE comprises of more than 1800 companies. But when we talk about BSE, BSE basically is the oldest exchange of Asia. It is the oldest exchange under complete Asia because BSE was formed by the Britishers in 1875. That means the BSE is more than 147 years old exchange. So it is Asia's oldest exchange. BSE's index name is Sensex. I hope you have heard this name, Sensex and Nifty. These are very common, index names. So Sensex is the index for BSE and BSE has more than 7,500 companies in it. So now according to this, it is looking like, BSE is more bigger than NSE, right? Yes, BSE is bigger, but still trading volume and, more traded index is NSE. NSE has more trading volume than BSE. Why? Because in BSE majorly, you are seeing that NSE has more than only 1800 companies and BSE has more companies, right? Why BSE has more companies? Because see, there are many small companies also that apply for the IPO, which are called as penny stocks, small companies. Small company listings are not allowed in NSE. They are getting listing only in BSE, right? And everyone doesn't, trade with the small companies. Majorly, the bigger companies like Reliance and all these companies, they are also part of BSE although, but all the big companies and the good companies, they come under NSE. So trading volume is more in NSE. People more trade in NSE, but yes, there are more companies in BSE, right? So these are the two exchanges in which, we trade. So whenever we will be trading in our live classes and whatever things we'll be following, we opt NSE, we follow NSE. Okay. Now, this was the basic things that I've told you about the market and everything. Now, here basically, there are many things in the basic of the market, like, the taxes and everything. There are many things that come under the basic things. But now let's move to technical analysis. Now discuss what is technical analysis and how we deal with the technicals. See, first of all, technical analysis basically is the study of a chart. See, this is a chart in front of you. This is Nifty's chart, okay, Nifty 50, which is the index of NSE. So this is the chart of Nifty. Now, when we basically, talk about Nifty, or whenever we talk about a technical chart, the most important thing in technical analysis is a chart, because without the chart, you cannot do technical analysis. You cannot study the concepts. So for doing technical analysis over a stock, the most important thing that you need is a chart. So technical analysis basically is a combination of two things. It is a combination of price plus volume. Technical analysis is a combination of price and volume. Now, this basically chart that you are seeing, this is called as a candlestick chart. It is called as candles. So the green and red bars that you see, these are the candles. A green bar basically is telling you that the market is going up, and a red bar basically tells you that the market is going down. Okay. The major concept here is that this color combination is giving you the idea of the market direction. But if you notice here, there are only two colors, either green or red. There is no other color. Only green and red, right? So a candle, basically candlestick study is like in this way. These are the candles that you are seeing on the chart, right? If it's a green candle indicates that opening price is low and closing price is high. That means the market is moving up. But a red candle indicates you that the opening price was high but the closing price was low. That's why the market is going down. So this is the basically a candle formation. But if you notice here on the chart, on this chart, green and red candles are of different shape and different size, right? All the candles are of not same shape and size. Every candle is of different shape and different size. Now, this different shapes and different sizes of candles basically, indicates you the different market momentums. Sometimes the market is very strong, sometimes the market is weak. So this candles basically, study of this candle is important. So what do we study here is that we basically study different candle patterns, because different shapes and sizes of candles make different candle patterns. In technical analysis, there are more than 26 types of patterns. In technicals, there are more than 26 types of patterns, in which 13 patterns are bullish candle patterns. That means, half patterns, that is from 26 patterns. We have 26 types of patterns, 26 types of candle patterns, in which the half are 13 patterns are buying reversal patterns and 13 are selling reversal patterns. That means, what is the role of these patterns actually? These patterns actually are telling you the reversal in the market. The term what I'm using is reversal. Okay. How reversal? The reversal in which, the market was falling and it reverses and tries to come up. And the selling reversal pattern is the pattern in which the market was already going up and it, reaches a level from it reverses to come down. So actually in trading, that reversal point knowledge is very important, because this reversal point basically gives you the right timing from where you can enter the market. Because if the market is at lows and you buy at a particular reversal point and then the market starts to come up, that is the best point to enter the market, right? You will get the maximum profit. But if the market is already at the highs and then you are buying it, your risk is very high but the reward becomes low, right? So timing basically is everything. Reversal point identification is very important. So these patterns basically help you to guide you to understand the reversal point. Now there are 26 types of patterns, and this topic is lengthy as well, because in our online live classes this almost takes 1 week to cover 26 patterns. But here let me discuss one or two patterns that those are important. So one or two patterns I'll discuss with you. See, the very first pattern basically is called as Doji. Doji basically is a pattern. It's a pattern name. Now why we are calling it Doji? What is it in Doji? Doji pattern is in this way, like a plus sign. Now if you see here, practically it is not having any body, right? Lower it is having opening price, high it is having basically, one second. It is having opening price, it is having closing price, above it's high and below it's low. So practically if we see here, in Doji, opening price is almost equal to the closing price, right? Opening and closing both are equal. That's why the body is almost like a plus sign. There is no body here. And in most of the cases, Doji candles are colorless candles. Doji doesn't have any color, neither green nor red, because opening closing is almost equal. Now this type of candle basically is called as indecision candle. Because this candle basically is not letting you to know the trend of the market. It is basically, confusing you. And this type of candles are also called as trendless candles, or in technical terms, some of the people also call them boring candles, because they are basically, under dull market condition. The market is dull. If market is forming Doji, that means the market is dull today. Okay. So Doji pattern, then why it is, how it is giving you the reversal. See, Doji is important in the market condition when, if the market is, going up for a very long period of time. From almost 2 weeks, the market is continuously going up, 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 up. And after a perfect uptrend, there is a doji formation on the highest point. After a perfect uptrend, there is a doji formation. So doji forming after a big uptrend or doji forming after a big downtrend is a sign of trend reversal. Doji formation after a very big trend is a sign of trend reversal. So if after a big downtrend doji is forming, then there are probable chances that market will now start coming up. And if after a very big uptrend there is a doji formation, there are probable chances that the market will start coming down. So that's why doji is very important. Now if I give you live example, see, now this is Nifty. Now just have a look here. This was the price point that Nifty achieved in the January 2022 starting. The price point was of almost on 17th of January. The high was 18,300. Okay. Now from there, the market started the downtrend. It fall, very badly. And then there was a set of Ukraine-Russia war news as well. So from 18,300, market fell up to 15,700. But do you see there is a doji formation on the bottom? This is a doji, right? You see this? I have circled it. So what happened after a doji? Trend got reversed and the market again come up. The market again came up, right? After the doji formation. So doji formation basically, is very important, as if the doji is getting formed. If the doji is getting formed, it is indicating you a strong reversal in the market. So doji is, a reversal sign. Then again the market came down. Again the market, came down in this month, in the month of May. And do you see here again there is a doji formation on the lows? See, there is again a doji formation, and again the market is not breaking this important support level. The same support the market made in the month of March, the same support the market is making in the month of May. So here this pattern is helping you to identify the reversal point, right? So this patterns, this is just a single pattern. There are many patterns more. They formed in the market, and these patterns are very important to judge the reversal of the market. Similarly, these all patterns you will learn in detail in our live classes. Now the next concept of stock market, very important one, is support and resistance. Because support is the point from where buyers enter the market, and resistance is the point from where sellers enter the market. So support resistance is very important concept to learn. Now see, the black line that I have drawn here, a parallel line, if I draw it here like this, see, this is an important support level. Not of right now, but an old one as well. Because the same low was respected by the market during the month of March, and the same low is now respected by the market in the month of May. So 15,700 and 15,800, this is a very strong demand zone, because whenever the market is hitting this point, the market basically is getting demand. The market is rising again up, right? So this area basically becomes the demand zone. So that's why, understanding the support and resistance concept is very important, because whenever a stock reaches the support and the support is not broken, so buyers enter from there. And whenever the stock reaches the resistance basically is on the highs, support is on the lows, resistance is on the highs. So whenever the stock reaches the resistance, the stock faces selling pressure and it tries to again come down. So support resistance in trading basically, helps you to understand the area from where you can buy or the area from where you can sell, right? Now see, this price point 15,743, this is a strong support level as we are discussing. So again and again, when the market will reverse from this point, again and again, if the market will reverse, this is a buying opportunity for you, right? You can buy from here. But see, support doesn't always hold true. There can be support breakout as well. Supports basically can be broken as well. So if this support breaks, if the market then travels below this point, then that is an indication that markets are weak. Now they will fall. So you can sell, right? You can
Like
say.
sir, like and when we have to buy and when we have to sell, sir. Like the
Whenever,
different.
near support, the market is making any pattern. Whenever near support, market is making any pattern and it is again reversing, then you have to buy. But if the support is not holding and the market is falling below the support, then you have to sell. See, simple concept is like this. For example, this is a support area, okay? This is a support area. Now, if you see here, market is coming down and it touches the support and it tries to bounce back. It touches the support here and it is bouncing back. So if it is bouncing back and again coming up, so this is an indication that you can buy so that the market again go up, right? But similarly, if again this is a support area and again the market comes down, but this time it touches the support but it doesn't reverse, it touches the support and then breaks it, it is broken, right? So then that is an indication that now you don't have to buy, you can basically more you can sell and the stock will go more down, because support resistance areas are acting as barriers. If one support is broken, then the stock will travel to the next support. If the next support is broken, then the stock will travel to the next support, right? It will go more and more down. And similarly is with the resistance. Similar is with the resistance. If there are resistance in the market like this, if the stock is continuously breaking the resistance, it will come up. So these are continuous resistance breakouts. So this will give you an idea that from where you have to buy and how much you have to wait. Because if I'm talking here that if this resistance is broken here, right? Now you clearly know that the next resistance is at this point. So you can hold your position from this point to this point, because market will come from this point. Let's suppose it's 100 rupees and this point is 120 rupees. And you bought it from 80 rupees. You bought from 80 and the stock is already at 100. But you have seen that 100 level is broken. So you are getting a clear hint that now you don't have to book at 100. It can travel to 120 as well. So you will now wait for 120. So this support resistance will give you the complete idea that where you have to exit when the support is getting respected. It is not getting broken. Then you have to buy. But if a support is broken, then you don't have to buy. So that complete idea will be according to these levels. Now, how to plot exact support resistance levels, that you will learn in the classes. That you will learn in the classes, that how it is getting plotted. Just one more example if I give you. Let's suppose I will give you an example of Axis Bank. It's a major stock, Axis Bank. Everyone knows about Axis Bank, right? Now see, Axis Bank is trying to reverse. But see the price location from where it is trying to reverse. Isn't it a very important location? Because every time it falls down, it takes the same area as support, right? It takes the same area as support. And from how much long it is taking? From last year, last year April 2021 April, then November 2021, then March 2021, and again. So this point, Axis Bank comes and holds this area again and again, right? But from this point, where does it reach again? From this point, every time Axis Bank easily comes to 800 rupees. From this point, Axis Bank every time easily comes to 800, right? So here, 800 rupees and 820 area is a resistance for me. It is a resistance. So here I know that I need to sell. I need to sell when the stock reaches this area. But if the stock is near the support area, I need to buy. So according to the levels, isn't it at the right point to buy? It is at a very good risk reward, right? You can buy from here and you can expect from 670 to 800. That is 20% profits.
Oh, sir, like how we can predict whether these lines will go, it will be there or it will go down, like how we can predict, sir?
So you can predict with this way. As I told you, there is a green candle and red candle, right? So if this line is not getting broken by a red candle and again the green candle is coming, so that means there is a reversal. See, the basic thing that I told you was what? Green candle means that the market is again going up.
going up.
So if this area is respected by the market and it is not getting broken by a red candle and again a green candle is coming, that means there is a reversal. Buying is coming. Right?
Green candle broken in the sense doji formation as well.
Green candle coming means the buying is coming.
Buying is coming. That no sir, like here doji formation will form now. Here after that it will get increase.
Every time it is not necessary doji will form. I told you there are 26 patterns, right? Any pattern can form. Any pattern can form. Doji is one of them, but any pattern can form. See, but here you are getting a doji, right? Luckily here we are getting a doji. But every time it is not necessary doji will always form. Doji is one of the 26 patterns. Okay. Any pattern can form.
Among 26 anyone will form, then we can say it's going to be increased like that.
Yes. Now those 26 patterns you will learn in the classes. We will teach you.
If the 20 among the 26 patterns nothing will form means it will not be, we can say it will not increase.
Yes, then the stock will
like that.
The stock will not go down, then it will start increasing. There is a reversal.
Okay.
And not also 26 patterns, 13 patterns, because 13 are buying patterns, rest 13 are selling patterns. Okay.
Selling patterns. That.
Yes. So do you understood now? So
like
these things are like running.
Yeah, I can understand. Like sir, like we have to see the graph. Based on that only we have to do like we have to plan, sir, like that or.
Yes. See, chart is the most important
for buying
thing.
or selling also.
Without chart, you cannot do technical. So you have to watch the chart.
Like this chart, like anyone can access, na sir?
Yes. Anyone can access.
Google or somewhere like that. I'm asking.
Yes.
So then if it is so simply they can see and they can buy the product, na sir? Like why we need to go for in detail study about this share marketing and all? Like you are saying, if it is in formation, if it is green mark means it will get increased.
See, but you have to learn na ki there are different patterns, right? See, there are some patterns in which you get low profit and there are many patterns in which you get high accuracy profits. And you have to see, you need a basic knowledge or you need a knowledge to learn, where is a support area, how to plot it. Like right now from last 1 hour, I am telling you, so you are feeling it very simple. Now you are getting it like it is on Google, so everyone can do. But did you went through this in the last so many years from yourself? No, right? Because you need to first learn. So learning is important. So everyone can access the data, that is very common, but people need knowledge to how it is done. Like, see, it is very easy to drive a car. Everyone can drive a car, right? But you should know how to drive it. Then only you can drive it, right?
Yes, sir.
So that is the important thing. So these all things you will learn in the live classes, and not only patterns. See, there are many things in stock market. The total concept of things are these are the topics, because after patterns we will teach you indicators as well. Indicator, what is the role of an indicator? Indicator will give you more surety about the reversal. They will give you more surety about the reversal, that yes, reversal is coming. So that will increase your accuracy in trading. So there are many indicators as well that you will go through. So these are all the set of things in technical analysis that you will learn in our live classes. The classes basically will give you a complete practical exposure that how trading is done, because we are not only giving you a theoretical overview, you will be also given a practical knowledge overview in which you will be taken into the live market, in which we will make you practice on live trading sessions, live trading, so that you learn practically everything.
Okay. Live trading and investing, everything will be going on, sir?
Yes, all that thing will be in practical sessions with us.
Practical sessions.
Yes,
then theory portion will be different and practical.
Yes,
practical will be different.
In stock market, the main thing is practicals, because stock market in itself own is practical. It is nothing theoretical, right? because theoretically we can just understand the concept, but till the time we have not used that or we have not implied them practically on the market, till that time theoretical study is waste in stock market. Practical knowledge is everything. So we will be focusing more on practical knowledge as compared to theoretical knowledge, because the more practically if you will learn the market, the more experience you will get and more comfortable you will be to understand the simple concepts. Okay. Any doubts you have? Anything you want to ask?
Also, like, if you teach means I can able to ask, like, now like how it went before now, so like that I can interact now, not much.
Yeah, this is the first experience, new experience with the stock market. Okay.
Yes.
But yeah, see, the course is important, and whenever you are learning these things, and whenever basically you are doing studying these concepts, so this will make you a complete trader. This will help you to understand the logics and the trades. You can basically you will be able to trade according to this, because see, in trading and in investing, it is very important to learn the things, because the more you practice, the more comfortable you will be in trading, and you can make money very easily then.
Like normally we are buying the shares, so with that money the company get profited, like that, sir.
See, company is getting funds from you.
The company is coming. Like the company is coming with the different, like for example 100 share they are coming, so 100 people we are going to buy that share, so with that with the help of that money they are getting share, they are getting benefited, like the company getting benefited.
Yes, they are getting benefited because they are getting money from you, and then that money they can use in their profit, that money they can use in their business to increase their profitability. So the more the company profit will rise, the more the share price will rise, and more the company will grow, the more your investment will grow.
Like we are getting minus, like we are buying that share from 100 rupees, we are going to sell 150, means how that how we are getting benefit, sir, like that, how that money, how it's come us.
See, you are buying a share at 100 rupees, right? But in a share market, there are many people working, thousands of people, lakhs of people working. You are buying share at 100 rupees, so someone is selling you at 100. That's why you are getting it, right? You're not getting from the company, you are getting from a person. You are buying at 100, so someone is selling you at 100. Now the share prices are going up and down due to demand supply. When the demand is more, when the buyers are more, the prices will move up. When the supply is more, the prices will come down, right? Now let's suppose there is more buying in the market, people are more buying the stock, so that price went from 100 to 110. Now you want to sell it, so you will sell, so then there will be some buyer who will buy from you. So this prices movement is all on the basis of demand and supply.
Okay, then from the company, who will get directly, who will buy, sir? Like that person, like
see, company is directly offering you share only one time in the IPO. Okay, once IPO is done, then traders and investors are working in the market. There is no role of company in between you. You are buying and selling stocks from different investor or different trader. Then people are working in that company. Now the company doesn't have any role. Company has got the money from you, right? Now traders and investors are working in the company. Now you want to sell the shares, I will buy from you. When I will sell the share, someone else will buy from me. So then investors are working under it.
Okay, sir. From someone I am getting, from me someone is getting.
Yes.
So the share, where it will end, sir? And what is the use of that share?
It will not end now. Why it will end? When you will sell, someone else will buy. There is, see, in stock market there is high liquidity. Always there is a buyer and always there is a seller. Always there is a buyer and always there is a seller. And what is the benefit? See, for example, you have 100 shares of Reliance, right? Now it depends you when you want to sell it. Now if you have bought 100 shares of Reliance, you don't want to sell it for next 20 years. So you are keeping it in your portfolio for next 20 years. So in the next 20 years, what will happen? Value of Reliance is also rising, right? net worth and valuation is Reliance is rising. So if example today Reliance share price is 100 rupees, for example, and in the coming next 20 years the share price moves from 100 to 10,000. So what will you get? Today you bought 100 shares at a value of 100 rupees, right? That means you invested 10,000 in the company. But in the next 20 years, its value has moved to 10,000 multiplied by 100. So now you're getting 10 lakh.
10 lakh.
See, simple concept you apply in the property, in the land. Whenever you buy a house, you're not buying now from the government, right? Government has first time allotted the plots and they have sold to the public, right? Now public is on their own, they are buying and selling. Na? You will buy a plot from someone else. You will buy a plot from someone else, but now it is with you. Now when you will sell it, you will sell to someone else. So public is trading, na? Public is buying and selling in those things.
So though that share will be only in rotation only. It will not end.
Yeah, it will not end. Like, see, the property doesn't end, right? The land doesn't end. Land. If you are having a land, if it is with you, it is with you for n number of period. But you want to sell it, you sell it to a different person, then it goes to different person. So the chain doesn't end. Okay. See, this concept you will learn in the classes, because right now in an overview, I know there are many concepts that remain untouched, but still you can compare it with the property concept. The property doesn't end up. If you have a property, if you have a house, it is with you till you want, but in the next 10 years its value will also rise. Its value is rising, right? Property is an asset. Same way equity is also, stocks are also an asset. So if you will sell it after 10 years, someone else will buy from you. Then if someone else will sell to someone else will buy. So chain keeps going because of liquidity. There are buyers and there are sellers always. In property market, there are always buyers and sellers, right? Same way in stock market as well, there are always buyers and sellers. So chain will never end. It will never happen that you want to sell and there is no buyer, or you want to buy and there is no seller. It will never happen. Liquidity is always there. Okay. So I hope the things were clear, because the rest of the things which is not clear, that will get clear in the classes. When you will join, so we will teach you from the complete basic to advanced level. So in every class you will learn the concept and that will be very clear. Okay.
So actually here for my concern is that timing is the problem. So actually I'm not a UG or PG. I'm studying PhD. So my focus is on full of my research work. Okay. I don't know, like if I start one experiment, I don't know when it will finish. Approximately I can say it will complete within 2 hours or 3 hours. But in meanwhile, I need to I may commit with some other experiments or some other also. Because why I asked Saturday, I think so. After 3 weeks only we committed for this class. Ma'am was saying like we are not offering for weekend classes, but for you only, but demo class is going for weekend.
Yeah.
So this is the time. So timing is the problem, sir, for me.
If timing is the problem, you can join the weekend sessions. We have weekend batches. Right now there is a weekend batch started. So if you're interested, you can join the weekend batches from today itself. The timing for the weekend batch will be 4 to 6 on Saturday and 10 to 12 on Sunday.
Morning 10 to 12.
Morning 10 to 12 or 12 to 2 on Sunday, and on Saturday it will be 4 to 6 every day, every Saturday and every Sunday. Only
2 hours.
2 hours.
For week classes, how many hours per day?
For weekly classes, Monday to Friday, it is 1.5 hours every day.
1.5 hours. Then how we can compensate one? Because for 5 days, almost 5 to 6 hours will take. Then Saturday and Sunday within 2 hours.
No. Either you go with Monday to Friday or you go with Saturday, Sunday. All the 7 days you are not taking the classes. Either you take weekday classes Monday to Friday, or you can opt for Saturday, Sunday weekend classes. You can opt for anyone.
No, so that's what I'm asking, because from Monday to
Friday, almost 5 or 7 hours you are taking from Monday to Friday. But for Saturday and Sunday means only 4 hours you are taking. How you can?
So the duration will rise now. The person who is learning in weekend batches, the course will end on a longer duration. Our weekend batches, are of longer durations. Like normally a weekday batch that is from Monday to Friday, it ends in the course. If course duration is 2 months, so it ends in 2 months. But for weekend, it goes till 4 months or 4.5 months. So duration is longer in weekend. Concepts will be completely cleared. Like if the person is opting for weekend, so it is not like that. In weekend you will get less classes, so you will learn less. No. Weekend batches duration is longer than.
Getting okay, fine.
So if you will be interested, you can join the weekend batches. Our weekend batches just started from today itself. Today will be the first class at 4 p.m. So it is starting from.
No, sir, that's fine only. But the problem is that I need to pay money now, so I'm depending on this scholarship only. That's okay. That's what I delayed all those things, because this is not a private fellowship, this government fellowship now, so we don't know when they will give. We have to
no problem. So you can discuss with the counselor. She will help you out with all these things, and
definitely,
whenever you feel comfortable, you can start it from next week or whenever you have.
Okay, fine.
Right. So any more doubts, anything else you want to ask?
Still no, I asked many doubts, I think so.
No problem. So you can be in touch with the counselor and she will help you. Right. So she will call you. Thanks a lot for joining. Thank you.
No, thank you so much, sir. Really happy with this class. Really, thank you so much. Really.
Thank you.
Subscribe now and press the bell icon.